Saving and accumulating assets for your retirement is a great start, but it's what you do with your money that really matters. So how will you reduce your taxes? How will you generate your income? How will you pay for the skyrocketing costs of healthcare and optimize your Social Security benefits? Welcome to Redefining Retirement. I'm Chris Abts from Cornerstone Wealth Management, and this is where you can count on straightforward and objective advice on the toughest challenges you'll face in retirement today. Now today, we're going to look at a very common type of investment, one that you probably own. And I'm going to show you why that's probably the last place that you'd ever want to invest your hard-earned dollars ever again. Does sound a little crazy, right? But after today's show, you're probably going to want to go out there, cash in those investments, and move your hard-earned dollars into something that makes a lot more sense. So we're going to cover 7 reasons, so 7 important points for avoiding this all too common type of investment. But don't worry, we're also going to provide you with some sound investment alternatives today. I know you're going to enjoy this. Here's what's coming up. Every year you pay taxes and capital gains and interest and dividends. Now here's the kicker. Even in years when you lose money. When you invest your hard-earned money into a mutual fund, they're not going to tell you where they are investing your money. So anything you can do with a mutual fund portfolio today, you can pretty much do it with an exchange-traded fund portfolio. I'm really excited about today's topic, so sit back and relax. Redefining Retirement starts right here, right now. Welcome to Redefining Retirement. I'm Chris Abts from Cornerstone Wealth Management, and this is where you can count on straightforward and objective advice on how to make the most of every dollar you save for retirement. Now today, we have got a great show lined up for you. We're going to look at a very common type of investment. One that you probably already own. Probably owned it for years. And we're going to learn why that's probably the last place that you'd ever want to invest your hard-earned dollars ever again. And after today's show, you're probably going to want to cash in those investments and move your hard-earned dollars into something better, something that makes a lot more sense. So we'll uncover 7 important reasons why you should avoid this all too common type of investment. And we're also going to take a look at some options that will likely make a lot more sense for you. So with that in mind, I want you to imagine this. I want you to imagine that you go to a money manager, right? A money manager, and here you are. You've worked your whole life. You've saved your whole life. You've been at a job just working away. You've consistently set money aside each and every paycheck. Maybe your company has even provided some type of matching funds for that retirement account. Now you've reached that stage. You have saved over many years. Let's say maybe you save a couple $1 million and you pick the number. So let's say you've saved $2 million and you're thinking, all right, I'm getting close to retirement. I need to find someone to help bring me through my retirement years. Now, just recognize that getting you to retirement compared to getting you through retirement, those are 2 very different ball games. So you come to this money manager and you say, hey, can you help me invest my $2 million? And he says, oh, you bet I can. And if I got a deal for you. Now, just listen to this deal. Now, as I go through this, I want you to tell me, I want you to think about if you think that this is a pretty good deal. So here's the deal that this money manager is offering you. Number 1, they say, I'm not going to tell you what I'm going to invest your money in. I'll give you a broad idea, but I'm not going to tell you. Next, you know what? He says, I'm going to maybe tell you a little bit about what the costs are, but I'm not going to tell you all of the costs. I don't want to tell you everything, just some of them. And oh, by the way, I'm going to hide all of the costs so you don't see them anyway. So how are we doing so far? Does this sound fun? Does this sound like a great investment? All right, don't worry, there's more. We're going to be really, really tax inefficient. We're going to underperform all the benchmarks out there. And oh, by the way, we're probably going to take on more risks than we tell you that we're actually going to take. That and more. So let me just stop right there for a minute. Do you want to take that deal? Does that sound like a good investment, a place where you want to put your hard-earned dollars? Well, of course you want to take that deal. You're probably thinking, why would I want to give my money to that person? Why would I want to invest my hard-earned money into that? I mean, basically, what I described, It doesn't sound like a good investment, does it? But that is the deal that you make when you invest your money into a mutual fund. So we're talking about mutual funds. So what we're going to do now is cover this in a little bit more detail. We're going to cover the 7 reasons why you're going to want to avoid mutual funds. So number 1, when you invest your hard-earned money into a mutual fund, they're not going to tell you where they are investing your money. Now, what do I mean by that? If you look at any mutual fund out there, so pick any mutual fund, it doesn't matter which one. So we're not talking an index fund, but any actively managed mutual fund. So what exactly are they investing your money into? What are they putting your money into? Do you know what the answer is? You don't know. You don't know at any time. They never tell you. In fact, the closest you can get is through a semi-annual report that they issue where they list all their holdings. But by the time you get that report, at least a month has already passed and they've already bought and sold some more of those. See, you deserve better than that. You deserve to know exactly where your money is invested. Now, when my wife and I, when my family, when we invest our money, or when I invest my clients' money, I want to know where I put that money at all times. And you don't know with the mutual fund. In fact, you never know. Number 2, when you invest your money into a mutual fund, you will only be told part of the costs. Now, I want to share something with you. These first 2 alone, they are deal breakers for me and my family. Now, here's what I mean. If you look at a mutual fund and you ask the question, hey, what is this costing me? Well, how do you know? Well, the first thing you do is you open up the prospectus. Now, that's that thick document full of legalese that nobody reads anyway. As it turns out, the prospectus will tell you some of the fees. Some of the fees you will find will be the management fees, the 12B1 fees, and other fees like that. But the point is this, those are only part of the fees. In fact, they might not even be half of the total fees. You know, the Wall Street Journal, Barron's, Forbes, and so many others have all written articles about this, about the hidden costs of mutual funds. And what we find is, if a mutual fund tells you that they charge 1% a year, guess what? When you get all the other fees in there that they don't tell you about, it's more like double. So it's at least 2%, if not more. So when you invest in a mutual fund, you don't know where your money is, and you don't know what you're paying. And I believe you deserve better than that. And that's why we put something together for you today. You'll learn how much risk you're taking, how much money you can lose in your portfolio, and how this will affect your ability to retire and live your ideal lifestyle with a Cornerstone Retirement Risk Assessment. So after we get some basic information from you, we'll take a look at how you're invested, and we'll sit down with you and show you exactly the amount of risk that you're taking. And then we'll share with you some of the strategies that you can use to protect yourself, to reduce that risk. And when it comes to retirement planning, this is an area where you can really move the needle, especially in today's challenging environment. In fact, for about 90% of the people we meet with, we're able to show them strategies to show them how to reduce their risks by almost half, yet still maintain a similar rate of return. So if you've saved at least $250,000 for your retirement, give us a call for your free strategy session. Folks, we've helped thousands of clients retire securely. And this simple risk assessment, it's something that can mean the difference at today's market volatility from derailing your retirement. So give us a call. And coming up after the break, we're going to look at 5 more reasons why you probably want to consider not investing your hard-earned retirement savings into mutual funds ever again. We'll be right back.
At Cornerstone, we believe you should be able to enjoy the retirement you have always wanted. To help you see your retirement strategy from all angles, we created a retirement roadmap, which is designed to help you discover the knowledge you need to take control of your money and live a confident retirement regardless of what challenges arise. So you envision the life you want to live, and we can help you create a plan that leads you down that path. Join us for a conversation about your vision for your ideal retirement by calling the trusted professionals at Cornerstone.
Approaching retirement requires a shift in how you view your investment and income portfolio. Are you making the transition successfully? Author Chris Abts, in his latest book, Maximizing Your Income, will show you how to structure your income while avoiding 10 retirement pitfalls. You'll also learn 3 strategies to create sustainable retirement income. Learn to plan for potential healthcare costs and how to avoid 4 common yet costly Social Security mistakes. The information you gain from this book may help you retire sooner and help you stay retired. Get your complimentary copy today at maximizingyouриncome.com and take control of your retirement.
Could your tax bill in retirement be larger than you think? Taxes can play a significant role in retirement. After all, they determine how much of your hard-earned savings you get to keep and how much you send to the IRS. If you're like many savers, you may not know the total amount of taxes you could potentially pay. I believe information is critical to making informed decisions about retirement. If you agree, I want to share a resource that can help. Use your phone camera to scan this QR code. It will take you to a page that generates a quick report that can help evaluate your potential tax bill in retirement.
If you'd like more information about financial planning, industry news, and market updates, you can subscribe to our blog. Visit our website at cornerstoneway.com. The resource request box is located on the bottom right-hand corner of the homepage. There you can submit your information to subscribe to our blog.
Behind every photograph is a story. How will your life story be told?
We got the house of our dreams. Thank you for the down payment, Mom and Dad. It helps so much.
20 years ago, I remember hugging you just like this, Dad. Thank you for teaching me strength.
Say hello to Emma. Mom, you gained the title Grandma and a new best friend. She has your eyes, and I know she'll have your heart.
Create a legacy, a story worth telling. To learn how, call 853-9033.
Welcome back to Redefining Retirement. I'm your host, Chris Abts from Cornerstone Wealth Management, and this is where you can count on straightforward and objective advice on how you can make your money go a lot further in retirement. You worked hard to get to where you are today, and you want your financial assets to work just as hard. So today, we're asking the question, should you invest your hard-earned savings into mutual funds? Unfortunately, you probably already own mutual funds, which is why I want you to understand the deal that you made when you invested your hard-earned savings into a mutual fund. So as a quick recap, what we covered before the break, when you invest your money in a mutual fund, you don't know where your money is invested. And second, you only know part of the story when it comes to fees. The mutual fund, they're not required to tell you all of the fees they're charging you. See, both of those are deal breakers for me and my family and my clients, and they should be for you as well. Now, the third reason why you should avoid investing your hard-earned savings into mutual funds is this. Mutual funds, they will hide all of your fees. Mutual funds, they don't like transparency. They don't want to show you the fees. They figure, hey, out of sight, out of mind. And I believe that's wrong. I believe you deserve transparency. Guess what? Not only do you pay higher fees with mutual funds, but guess how much of it you can deduct on your tax return? None of it. Common sense says that if you see what you are paying for something, well, at least you have a chance to deduct some of it. All right, number 4, and this is a good one. Nearly all mutual funds will underperform their target benchmark. Now, what do I mean by that? Did you know that generally speaking, 85% of mutual funds underperform their benchmark? In other words, when you invest in a mutual fund, you have an 85% chance that you will underperform. How's that for unfair odds? For example, if you're talking about large company stocks, if that's what you want to own as part of your portfolio, 80% of mutual funds, they don't beat the S&P 500 index. You would be better off just to own the index itself. Mutual funds, they typically underperform the benchmark. By the way, studies have shown this over and over and over again. So on average, 85% of them, they underperform. And the 15% that do overperform, guess what happens over the next year, the next time period? Well, they're back to probably underperforming again. So they might get lucky, but heads up, that's all it probably is. All right, moving on to number 5. Mutual funds are very tax inefficient. So when you have mutual funds that are not in a retirement plan, like an IRA or 401k, if you have mutual funds in after-tax accounts, like regular taxable accounts, or maybe an account held in your trust, You know this because every year you get a 1099. Every year you pay taxes and capital gains and interest and dividends. Now here's the kicker. Even in years when you lose money, when most people's accounts are down and in years, they're shocked to get 1099s showing they owed tax somehow on capital gains. Imagine that. You lose a chunk of your money in 1 year and you still owe capital gain tax. So mutual funds, they are very tax inefficient. All right, the sixth reason why you should avoid putting your hard-earned money into mutual funds is because you have no clue as to the price. Now, what do I mean by this? When you invest in a mutual fund, can you do it at any point in the day at a certain price? No, you cannot. So whether you realize this or not, the way it works is you put your order in to invest in the mutual fund and you get whatever the price is at the close of that day. So you don't know what the price is going to be. You don't know. You cannot buy a mutual fund after the market closes. You can only buy it during the day. So what you're saying is, hey, I'm going to buy, who knows what it's going to be worth at the end of the day. It's the same thing when you sell. This is the only investment that I'm aware of that you don't know what the price is when you're buying and when you're selling. Seriously? Now, that's fine, I guess, if you're doing what's known as dollar cost averaging into, say, a 401k or some type of IRA. But for serious investors, I believe you deserve better. All right, we're finally at the last one, number 7. Mutual funds, they will take on more risks than you realize. And this is a biggie because what happens here is that people say something like, hey, I'm a conservative investor. Let's put our money into a conservative mutual fund. And then you go and take a look at that mutual fund, and you know what you learn? If the market goes south, if it goes down, you could lose a big chunk of money, maybe 20, 30, 40%, which is not most people's definition of conservative. So there you go. 7 reasons why I believe you should not invest your money into mutual funds. Now, while it's fair to say that mutual funds were a great way to invest many decades ago, and I will tell you that I started investing my own money in mutual funds starting way back in the 1980s. But since that time, there are far better ways for you to invest. Today, you have much better options. So, have you invested some of your hard-earned savings into mutual funds? And do you know what you own? Do you know why you own it? And if you don't know, then that's why we put something together just for you on today's show. So with so many unknowns today like stock market volatility, inflation, interest rates, rising healthcare costs, the threat of rising taxes, you've got to ask yourself, how are you going to grow your nest egg safely this year? Obviously, it's going to be a challenge. And most folks, they haven't really given this enough thought. So what is the fastest way to grow your money in these volatile times? It is by not losing money. This could be a strategy where you could save tens of thousands, if not hundreds of thousands of dollars during your lifetime, because the less money you lose in a volatile environment by having a strategy, the more money you have to spend on you, your family, and your retirement. So I invite you to come in, visit with one of our fiduciary advisors, learn how you could reduce your risk, yet still maintain your returns in retirement with our free Cornerstone Retirement Risk Assessment. You bring in some information about what you've saved for retirement, where it's saved, what the income sources are, and we'll sit down and build a customized plan for you that's suited just for you so you can see just how much money you could save. So if you've saved at least $250,000 for retirement, call us to schedule your free strategy session. Now, I wish we could do this for every person, but we can't. This is something that could save you tens of thousands, if not hundreds of thousands of dollars. And coming up next, we're going to look at some investment options that are likely going to make much more sense for your hard-earned savings. We'll be right back. Could your tax bill in retirement be larger than you think? Taxes can play a significant role in retirement. After all, they determine how much of your hard-earned savings you get to keep and how much you send to the IRS. If you're like many savers, you may not know the total amount of taxes you could potentially pay. I believe information is critical to making informed decisions about retirement. If you agree, I want to share a resource that can help. Use your phone camera to scan this QR code. It will take you to a page that generates a quick report that can help evaluate your potential tax bill in retirement.
When you have confidence in your retirement future, you can live the life you've always imagined. Because of planning, you now have time to reflect on the wonderful memories of your life. To spend fun times with your grandkids, sharing the joy of their excitement about life. At last, you have time to breathe and rekindle the love of your life. Why? Because you imagined what could be. You planned for retirement. So today, you own your future.
For trustworthy fiduciary-based guidance, call 775-853-9033.
At Cornerstone, we believe you should be able to enjoy the retirement you have always wanted. To help you see your retirement strategy from all angles, we created a retirement roadmap, which is designed to help you discover the knowledge you need to take control of your money and live a confident retirement regardless of what challenges arise. So you envision the life you want to live, and we can help you create a plan that leads you down that path. Join us for a conversation about your vision for your ideal retirement by calling the trusted professionals at Cornerstone.
Approaching retirement requires a shift in how you view your investment and income portfolio. Are you making the transition successfully? Author Chris Abts, in his latest book, Maximizing Your Income, will show you how to structure your income while avoiding 10 retirement pitfalls. You'll also learn 3 strategies to create sustainable retirement income. Learn to plan for potential healthcare costs and how to avoid 4 common yet costly Social Security mistakes. The information you gain from this book may help you retire sooner and help you stay retired. Get your complimentary copy today at MaximizingYourIncome.com and take control of your retirement.
Want to learn how you can make your money go a lot further in retirement? You've come to the right place. This week, we're learning about mutual funds. Now, before the break, we shared 7 reasons why I recommend that you stop investing your money into mutual funds. There are much better alternatives. Now, before the break, I promised you that we would share some investment alternatives with you. Now, one of the biggest alternatives available today for mutual funds, these are called exchange-traded funds, or ETFs. Now, if you take a look, we're on iShares, the website here, iShares.com. Now, this website, it shares ETFs that they have available. Now, before we go over this, let me start off by explaining just what an exchange-traded fund is. Basically, it's what's known as an index fund. So, if you have an S&P 500 ETF or exchange-traded fund, you literally own every single stock in the S&P 500. So you own 500 stocks in that fund, and you always own those 500 stocks. So you always know what you own in these things, and you always know what the costs are. And if done correctly, they are extremely inexpensive. Now, in addition to that, you can get exchange-traded funds or ETFs to do pretty much anything you want. You can buy them during the day. You can sell them during the day at whatever price, just like a stock. Now, they are exceptionally liquid, and they are basically replacing mutual funds. Now, here on this iShares website, there are dozens and dozens and dozens of options, hundreds of options. So there's over 300 different exchange-traded funds here. And this is only iShares. You know who else has exchange-traded funds? Vanguard does. Fidelity funds, and the list goes on. And did you know that they are moving away from mutual funds and moving to where? That's right, these exchange-traded funds. Frankly, there are dozens of places you can go to get these exchange-traded funds. So anything you can do with a mutual fund portfolio today, you can pretty much do it with an exchange-traded fund portfolio. Now, why would you want to do that? Well, for starters, this is exactly how we invest, or how my family invests, how our clients invest. In fact, here at Cornerstone, this is how we advise the vast majority of our clients to invest their money. Now, why do we invest this way? Well, simple. You know what you own. You know what you pay. You know what price you're buying. You know what price you're selling. They're very tax efficient. So there are all kinds of reasons that you'd want to go in this direction versus using mutual funds. And if you're doing this investing yourself, this is a great website to check out to consider replacing your portfolio of mutual funds. Now, for those of you that work with a financial advisor, if he or she is not recommending things like this, then I would have to say that you really should sit down with another financial advisor, one that's someone who's reputable and knowledgeable, one that's required to put your interests ahead of their own, so a fiduciary. So as a quick recap, we focused on mutual funds today to educate you on the deal that you make whenever you invest your hard-earned savings in a mutual fund. And basically, you're making a deal with the mutual fund where you don't know what you own. You don't know what it costs. You will be very tax inefficient. You're going to take on more risk than you realize, and the list goes on. When you really look hard at this, you've got to ask the question, are you putting your money into a mutual fund to benefit you or the mutual fund? Then we looked at a financially sound alternative, so those ETFs, exchange traded funds. And instead of using mutual funds and all the bad stuff that you get with them, it's all wiped away with these exchange traded funds. And they replace all the bad, yet still maintain the benefits of mutual funds. So that's why these ETFs have been continuing to grow in popularity, whereas mutual funds, they continue to become less popular. Now, in its most basic sense, this really comes down to risk. How much risk do you need to take to earn a fair return? And the fastest way to grow your money is to stop losing it. So think about it. The more money you lose, the more gains you need to make up for your losses. And the less you lose in today's challenging environment, the more money that you have for you and your family to spend in retirement. And that's why we put something together for you today. You'll learn how much risk you were taking, how much money you can lose in your portfolio, and how this will affect your ability to retire and live your ideal lifestyle with a Cornerstone Retirement Risk Assessment. So let me explain how this works. First, we'll get some basic information from you. We'll take a look at how you are invested, and then we'll sit down with you and show you the amount of risk you're taking. We'll share with you some of the strategies that you can use to protect yourself. So when it comes to retirement planning, this is an area where you can really move the needle, especially in today's challenging environment. And for about 90% of the folks we meet with, we're able to show them strategies to literally reduce their risk by almost half, yet still maintain a similar rate of return. So if you've saved at least $250,000 for your retirement, give us a call to schedule your free strategy session. We've helped thousands of clients retire securely, and this simple risk assessment, it's something that could literally mean the difference of today's inflation and market volatility from derailing your retirement. That's our show, and I hope you enjoyed it. Thanks for watching, and I look forward to seeing you next week.
Jolly good show.